Hi, everyone, and welcome. I'm so glad that you're here helping us kick off September 1st with a trade options conversation and question and answer period with Omar Khan from Theta Trading. It's my absolute pleasure to introduce Omar, but before I do, I should just tell you my name is 𝐓𝐡𝐞𝐭𝐚 𝐓𝐫𝐸, and I have been part of the Theta Trading community for almost 2 years now, a former student, and really excited just to be part of today's interactive session. And again, it's my absolute pleasure to introduce Omar Khan, founder of Theta Trading, who is going to spend the next little while with us, talking to us about options, answering some of your questions and answers. So let's kick it over to Omar to start us off.
Christine, thank you very much. I appreciate it. Guys, I'm going to show you something today that is going to, in my opinion, change the way you see money and how you see your investments in the future. So a little about my background. My name is Omar Khan, co-founder of Theta Trading. And what we do here at Theta Trading is we show people how to become financially independent. And that's the key. You know, the way that I grew up is I didn't grow up with a lot of money. My parents were always fighting about money growing up, and they were immigrants to Canada. They were both educated in a sense. They both had university degrees, okay? But like many other people we know in society, they were financially illiterate. Very literate, very educated, but financially illiterate. So as I got older, you know, I didn't want to have this issue. I didn't want to have a money problem as I got older, you know, and went to university. I thought I'd get some financial literacy there. Nothing. You know, and I went to the University of Toronto, got an economics degree, and I came out completely financially illiterate. Now, that doesn't make a difference in the sense that, you know, some people go to university, some people don't go to university. It really doesn't make a difference. The point is, I know both people who went to university and didn't go to university, both completely financially illiterate. I'll give you an example of my wife. My wife has 3 degrees, okay, including a master's degree, but completely financially literate. So they are 2 separate things. And if you look at the amount of problems a lack of financial literacy causes, you look at the #1 cause for divorces, anxiety, stress, fear of the future. A lot of that is due to a lack of financial resources. So how do we tackle that? How do we take care of this problem? And so what we did was, over the years, I learned how to trade. I started first trading in 1998. So when I was in the tail end of my university career, and the reason is because I knew I had to pay back my student loans, my OSAP debt, and I started trading in order to be able to pay that back. Because again, I didn't want to live the life my parents lived. Not to say it was a horrible life, but it was always, you know, always struggling to get by type thing, and I didn't want to live that life. So I started trading. I started learning how to trade, and what I did over the years is I used my trading profits to acquire a lot of real estate. I acquired 30 plus properties simultaneously. I mean, I actually held 30 plus. I've sold off a few of them since then, but I held more than 30 properties, and that was done from my trading, right? And now I have a sizable trading account. I have a sizable real estate, you know, portfolio, and this was all done through financial literacy. This is what I'm going to teach you guys today. Like, even if you have a job, as long as you're willing to learn and apply that knowledge, well, the possibilities are endless. But you've got to be willing to apply that knowledge, right? And furthermore, you've got to be willing to learn something new. So I'm going to show you exactly what it is that we do here. So I'm going to share my screen and show you what I do, okay?
Great.
All right. So share screen. Here we are. Okay. Share. All right. Okay, so here is a simple stock quote. Okay, now we can look up all kinds of stocks, but for the sake of simplicity, I'm going to look up Tesla. Okay, so what we do initially here at Theta is we look at companies we want to invest in. So we do something called fundamental analysis, which means we research these companies significantly. We look to see if this is a company we want to invest in. That's the first and foremost criteria for us, always. It has to be a company that we're willing to invest in because we believe in the long-term prospects of this company. And that is something called fundamental analysis. We actually examine the company. What does it do? Why does it do it? How much money they make? Where are they going to be a year from now, 2 years from now, 3 years, 5 years? So, for example, if I think Tesla, let's say a year from now, and this is not stock advice or actual, prediction or anything, so don't take it that way. If I think Tesla's going to be $1,000 a share a year from now, well, I've done my homework, right? And I'll say, okay, why do I think it's going to be worth $1,000 a share? Well, that is fundamental analysis. So we look at something called, for example, the PE ratio. We look at earnings per share, right? And we can extrapolate a future value based upon what a reasonable valuation the market would assign to the stock. So let's just say theoretically, I said it is $1,000. Okay, great. Well, there's a couple different ways for me to go ahead and look at buying the stock. First thing I could say to myself is, well, hey, I could just buy the stock for $737. So currently, Tesla is trading for $737. Okay, it's up $1.50 for the day roughly. Tesla Inc. So you can see, and you can do this for any stock just to find out what it's trading at. So I'm just using here, for the sake of simplicity, I'm using Yahoo Finance. But instead of actually buying the stock at $737, well, we take a different approach. What we use options to get into our positions. Okay. So I'm going to show you. So I'm going to hit this options tab right here. Okay. And all this complicated nonsense is going to show up, and it's going to look very complicated. It's not once you learn what it is. All right. So I'm going to go to a date here of, let's just say for sake of simplicity, October 15th. Okay. Now I know that Tesla's trading at 737. Okay. And again, like I said, furthermore, I think it'll be worth a lot more in the future. So instead of actually just buying Tesla, okay, I'm going to actually agree to buy Tesla instead. Okay, so I'm going to scroll all the way down here to something called the puts section, which is right here. You can see here, puts for October 15th, okay? And down the middle here are these things called the strike price, okay? Which means these are different prices I can agree to buy Tesla at, okay? And remember now, Tesla's trading at $737 currently, okay? So what I can do, instead of just buying Tesla, I can agree to buy Tesla, let's say for $735, which is almost the price it's trading at now, okay? Almost the price it's trading at now. And what do I get paid for that? Well, let's take a look while this loads up. It looks like I am going to get paid. Oh, something went wrong here. I think I've got the wrong strike date here. So I'm going to go back to this here. And like I said, I'm going to agree to buy Tesla for $735. Okay, so I'm going to click on this right here. Okay, and let's see what I get paid. I'm getting paid $41 a share. Okay, now think of that. Okay, someone is willing to pay me $41 a share. Okay, which is about 6% return, or just shy, maybe 5.5% return for a little over a month, simply for me agreeing to buy Tesla for $735. Now, the reason I don't care, right? So if Tesla goes below $735 and stays there by October 15th, well, I'll have to buy it. But again, I have no problem buying it. Why? Because I've done my fundamental homework, right? I think Tesla will be worth $1,000 a share from now. So there's two different choices. I can buy Tesla today for $737. Or instead of doing that, I can agree to buy it for $735, which is a couple dollars less than it's trading for. But in exchange for me agreeing to buy it for $735, the market is paying me $41 a share. And what's the worst that will happen to me? Well, I'll own Tesla for $735 a share. But I'd have no problem. I'm totally okay with that. So every single trade we do here at Theta is like this. It's a win-win situation. We keep this $41 a share no matter what happens. Whether it goes below $735 or it stays above $735, it doesn't matter to us. We keep that $41 a share no matter what happens, okay? Now, the only difference is if it does go below that $735 number, well, then we have to buy it. Again, we have no problem with this, okay? This concept is called a naked put. And this is the basis behind what we do. So the first thing we do is we look at fundamental analysis, because there's a likelihood that we're going to have to own these companies' shares in case it goes below the price we agree to buy it for. But all the shares of the companies we're agreeing to buy are companies that we think will be worth more in the future because we have done our homework. And we take you through this homework. We show you our homework. You're part of a community. So we've done this homework. We think it's going to be worth a lot more. So again, two choices for us: buy it at $735 or simply agree to buy it for $735. Right? Well, sorry, buy it for $737 or simply agree to buy it for $735. Now, I'm going to ask a question. How many people knew that this was even an option? It was even a choice. Did you know that you could agree to buy shares of companies that you wanted to buy for lower than their current market price and get paid a lot of money for it? In fact, on this particular trade, I get paid $41 a share, 5.5%. Think of that. What could that add up to on a yearly basis? And the worst that happens to me, I own Tesla. Well, I'm fine with it. I've agreed to buy it. I have no problem owning it. Now let's take a look at a couple other trades, right? So what else can we do here? So let's take a look at it. Let's take a look at Apple. Okay. So again, Apple's trading for $153. It's up $1.68, and I'm going to hit the options button here, and I'm going to go to the same date, October 15th. There's a very specific reason I'm picking October 15th. You know, there's a lot to learn. I'm not going to sugarcoat it and say there's not a lot to learn. There's a lot to learn. So again, I can agree to buy Apple for $153 today, okay? Or I can say, you know what? No, I want a discount on my Apple shares. I'll agree to buy it for a little bit less than it's currently trading at, either 150 or 152.5. So I'm going to scroll down here, and again, there's a lot to learn, okay? And that's the whole point of having this course. So it looks like I could agree to buy Apple here for 150, and let's see what I'm getting paid on that. Well, I'm getting paid $3.25 a share just simply for agreeing to buy Apple for $3 below its current value, okay? Now, again, think of this. I'm more than happy to buy Apple for 153, so I'm even happier to buy it for 150. And on top of that, you're going to pay me $3.25 a share? That's over a 2% return for about a month and a half. Now, again, I'm very happy to buy Apple for $150 a share, right? So that is the basis behind what we do each and every day here at Theta. Now, another question you may have is, well, what happens if I have to buy the shares? What happens if I get stuck buying the shares? Well, we have ways that we can make money even if we have to buy the shares. So I'm going to go back to this Tesla example, okay? And again, now Tesla's trading at 736. Was at 737, but that's what stocks do. They move up and down all day long. So let's take a look at Apple again. Tesla. And let's say, for example, we just bought Tesla for, I don't know, let's say last month we agreed to buy it for 740, and now we had to. Okay, great. And I say to myself, you know what? You know, I wouldn't mind getting rid of my my Tesla shares for $800 a share. Okay. I wouldn't mind getting rid of them, right? I wouldn't mind. I only paid $740 for them. Plus I got paid $41 a share when I agreed to buy them. So I'm really at $699 or $97 a share. But I'm going to agree to sell my shares now for $800. Well, if I simply agree to sell my Tesla shares for $800 a share, I'm making another $18.05. So we made $41 when we agreed to buy a Tesla, and then we had to buy it. You know, sometimes we have to buy it, sometimes we don't. And now I turn around and say, you know what? I'm happy to sell my Tesla shares for a significant profit. And I'll say, you know what? I'm happy to get $800 a share. And in exchange for that, the market is paying me $18 a share. Now, why are they paying me $18 a share? Well, if it goes above $800, I still have to sell for $800. So if it goes to $820, $850, whatever it might be, I have to still sell for $800. But again, I'm pretty happy selling it for $800 because I don't think it's going to go a lot higher than that, or even might not even go that high by October. So I'm more than happy to get rid of my Tesla shares for $800 a share. And you're going to pay me another $18 on top of that? Again, this is what we do each and every day here at Theta. And remember the worst case scenario for us. The worst case scenario, again, for us is that we own shares in a company that we wanted to own anyways because we believe it'll be worth a lot more in the future, right? Now, let me ask you a question. Again, did you know that this was even possible, right? And if you did know it was possible, has anyone ever done this? Now, there's a lot to learn. I showed you a very, very simple way to do things. So like what I've just showed you right now is maybe how to, I'll give you a car analogy, how to turn a car on, put it in drive, and drive around in circles in an empty parking lot. No, odds of hitting anyone. It's an empty parking lot. You're not going very fast. I've just showed you how to do that. But that doesn't mean that you know how to navigate a racetrack or can drive on the highway or on traffic. That's the idea. There's a lot to learn. So as simple as this may be, to be good at it and to be efficient at it, there's a lot to learn. So the reason we started Theta It gave us our financial freedom. So I quit my job in 2014. And at the time, I had a great job. I got paid lots of money. I traveled the world, big expense account, awesome job. Like most people would not complain. And I had my trade income. I'd also acquired about a dozen properties by then. So I was in a really good situation. But I also knew in the back of my mind, I didn't want to live the rest of my life with regret. I wanted to do what I want to do with my life, not what someone told me. But how do I get to that position, right? We had three young kids at home, 6-year-old, 4-year-old, 2-year-old, and a full-time living nanny. So my expenses were very high. Now, most people, what they do is they'll say, well, I just got to suffer in this job because I've got these responsibilities. But I didn't want to just have to stay at a job because I had to stay at it because I had obligations. And I know what it feels like. I've been there. I know what it feels like to pay off student debt. I know what it feels like to start off at absolute ground zero. But anything can be accomplished through knowledge and application of that knowledge. So I quit my job and I came home and told my wife, I said, I quit. I will never in my life going to work for anyone again. And I knew it. And the reason was, it wasn't because I had, I had money, I get it. But more importantly, I had knowledge. I knew how to make my money grow at a nice rate while keeping my risk level at a very tolerable level for me. And that's what ultimately gave me the confidence to quit my job. And I knew in my mind that I would never go back. So over the years, I acquired more real estate. And over the years, myself and my business partner, Matthew Todman, who's also my best friend, we started this company in 2019. In September of 2019, it's been almost 2 years now.
Yeah.
And the reason we started in 2019 is because we had been teaching a lot of friends and family over the year, just teaching them how to do this, how to become financially independent. We taught about, I'd say probably close to about 100 people, right? And just literally one at a time. And it was time consuming. And obviously there's no benefit to me. I just taught people because I love to teach people. Because again, it gave me my freedom. And I'm a big believer in financial freedom and financial literacy. So people was like, hey, why don't you teach people how to trade? Why don't you teach people how to trade? And that's why we started Theta. We started because we wanted to give enough people the ability to take care of themselves and their families for the rest of their life through knowledge and application of that knowledge. And that is how we started Theta. So 2 years later, we have taught about 1,200 people so far and growing every day. And we plan on teaching tens of thousands over the years. And it's a great community that we've created. It's a community of like-minded individuals who want to make a lot of money and do good with their life and live life on their terms. And that's the story of Theta, right? You guys can look at our reviews. I think they speak for themselves. You can see from the logic how much sense this makes. Instead of just buying a stock straight at the current price, why not agree to buy it below its current price and get paid a lot of money for doing that? And again, that is what we do day in and day out here at Theta, okay? So I've showed you a couple examples, but I'm going to show you a couple more, okay? So let's go to another stock that we like here at Theta. Let's go to Facebook, okay? And generally speaking, we only trade stocks that we are very, very comfortable with, that we've done lots of homework, that are, global brands, household names, because again, we always want to make it so the worst case scenario, if everything goes wrong, right, that we wind up owning a stock that we love, right? Because we are fundamental believers in Warren Buffett's principles of his two rules to investing. First rule is do not lose your money. That's rule one, okay? Rule number two, do not forget rule number one. It's just that simple. So for us, if we have to buy shares in a company that we have to buy, well, it's okay. We don't mind holding them and waiting for them to recover. We can also, again, like I said, agree to sell our shares for a certain price and get paid. But the point is, we can wait it out, right? Even if the stock happens to go down. What I'm giving you an example of is, let's say last year, okay? Last year, the pandemic hit, okay? It was totally out of the blue. Nobody expected it. So you can see here, January of 20, the market's moving along. Facebook here is at $201, and it took a major nosedive, right? About a 30% nosedive. It really went down the toilet. Again, all stocks did, right? Now, the reason we weren't worried or upset or frustrated is because we knew that it was a high-quality company. We had done our homework, and we thought it was going to be worth a lot more in the future. So instead of panicking and getting worried, we're like, whoa, we got paid a lot of money just for agreeing to buy it. let's wait it out. And that's exactly what we did. And you can see Facebook from the trough of the pandemic-induced low went to $166.80 a share here, and now it's at $383. That is a huge difference, and that's what gives us our conviction when investing in these companies, right? You can take a look at another stock. We can take a look at Apple, for example. So Apple, same thing. You can see here in 2020, so January, it's at $77 a share, and it went all the way down to 63, and now it's recovered all the way to 153. So this is the whole point investing in high quality companies, because if you invest in high quality companies and you believe in their long-term viability, the ability for them to make more money year after year, well, theoretically, then the stock price should appreciate along with it. So even if I have to own the shares for a time, I'm okay with that. It allows me to sleep all night. And you can see from the returns, we can make phenomenal returns simply just by agreeing to buy and sell these shares at the prices we want. All right? Now, does that make sense to everyone? Does that resonate with people? I am going to show you another example. Okay. I'm going to go to, again, like I said, let's go to Facebook. Okay. So Facebook is trading it for $383. And I'm going to say to myself, you know what? I wouldn't mind picking up Facebook for $380 a share. Now, some stocks we like to buy a little bit cheaper. Some stocks we like to buy a little more expensive. It all depends how much we're getting paid to agree to buy it. So I'm going to go to Facebook here. And I'm going to say I agree to buy Facebook for $380. Now, remember, it's trading for $383 right now. So just simply for me agreeing to buy Facebook for $380 a share, which is below its current market value on October 15th of 2021, about a month and a half from now, I'm getting paid almost $10 a share. Can you imagine that? Someone is going to pay me $10 a share just for agreeing to buy a stock that I would have bought anyways below its current market value, right? And this is just shy of about a 3% return. So very, very healthy return in a month and a half. And my worst case scenario is that I own Facebook for $380 or less. That is no problem for me because I wanted to buy it anyways. Right? Again, this is what we do each and every day. Every single trade for us is a win-win situation. We're either happy if we have to own the stock and it went below its current price, which means we got a nice discount, or if it doesn't go below the price we agreed to buy for, fine. Either way, we keep this premium. This is called the premium. Now, you think about it like an insurance policy. So essentially, we're acting as an insurance company on this stock. We're agreeing to buy it for a certain price, and we are essentially an insurance company. But unlike a traditional insurance company who doesn't want that event to happen, we're okay if this event happens. And like, for example, if Facebook falls below 380 and stays there, we're fine with it. Why? Because we think Facebook's going to be worth more in the future, right? And that is what we do, okay? All right, so let's take a look at a couple other trades, okay? So I'm going to go to, let's go to Nike, okay? Okay, another company that we like a lot here. Again, these are not meant to be stock advice. It's not the purpose of this. We're simply trying to show you what is possible when you understand how this works. Okay, so Nike. All right, so Nike is trading for $165 today, okay? All right. And we say to ourselves, you know what? We're about to hit September, which is traditionally a pretty good time of the year for Nike. So we're going to agree to buy it for $165. Again, remember, we can just buy it for $165 right now if we want. Or we can agree to buy it for $165. So I'm going to go to October 15th here, okay? And I'm going to agree to buy Nike for $165. So how much am I getting paid here? Oh, for some reason, I don't know what happened there. Let me just fix this. All right, I'm going to go back here. So Nike 165, here it is. How much am I getting paid? I'm getting paid almost $6.50 a share. Think of that. I'm getting paid around 4%, right? 4%. For doing what? For agreeing to buy Nike for the price it's currently trading at? Now, 4% for a month and a half, and the worst case scenario is that I own Nike for $165 or less. Again, that is what we do all day, every day here at Theta. Every trade is a win-win situation for us. We're happy if Nike goes below $165 and we have to buy it. We're happy if Nike doesn't go below $165 and we don't have to buy it. Either way, we keep this premium of roughly $6.50. Now, this premium changes from like minute to minute based upon the stock price. There's a lot to learn. I'm not going to sugarcoat it, but I do promise you this. If you take the time to learn how this works, what the theta strategy is, and apply it, it has the ability to change your life financially. Now, again, like I said, if you take a look at our reviews, you will see what an impact it's made on people's lives. Just take a look at our Google reviews, and you'll see what people have to say for their own words. What does it mean to them? Now, I know this topic may be a little bit confusing to people, so I'm going to give you an analogy here of, let's say, a house, okay? Let's say you walk into a home and you say, I would like to buy a home, okay? And that home happens to cost whatever it happens to cost, okay? And you say to yourself, well, let's say the home costs $500,000. And imagine you tell the homeowner, you say, hey, homeowner, you know, I think your house is going to be worth $550,000 a year from now, just based upon demographics, low interest rates. You've done your homework, same way that we do homework on the stock side of things. Okay, so you've done your homework. You say it's going to be worth $500,000 a share. I mean, sorry, $500,000 for the house. But a year from now, it's going to be worth $550,000. Okay, you've done that. But you go to homeowner, you say, homeowner, you know what? Instead of buying your house for $500,000, I don't want to do that. I want to just agree to buy your house. I'll guarantee I'll buy your house next month for $490,000. And the homeowners are like, why would I do that when I can just sell it for $500,000? Why would I agree to sell it to you for $490,000 next month when I can just sell it today for $500,000? And you tell the homeowner, on top of that, you're going to pay me $10,000 on top of that just for agreeing to buy your house for $490,000. Now, what is that homeowner going to say to you? The homeowner is going to probably tell you to get lost. They might call the cops. You might get in an argument, right? It's not going to end well. Now, you can't do that on the real estate side, but you can do this with stocks. And imagine just going around agreeing to buy the best companies in the world at a discount and getting paid a lot of money for it and learning how to do that efficiently. Now, another great thing is because we know our worst case scenario. So in this example, we know that we'll have to buy Nike for $165. That's the worst that'll happen to us, right? Now, if that's the worst that'll happen to us, I don't have to look at my phone every day. So trading doesn't take a lot of time. It only takes about 30 minutes a day. So when I was trying to leave my job, I was able to incorporate this into my life while I was working, while we had 3 young kids at home, because it doesn't take a lot of time once you have the knowledge. So you can trade from your phone anywhere in the world in 30 days or 30 minutes a day or less. Now, of course, there is that tendency to look at your phone all day long, but that's not what we want to do here. Okay, now again, I'm going to go back to Tesla as another example. And Tesla's now down $1.39. So we said to ourselves, okay, well, what do we want to buy Tesla at? So I'm going to go to this options here again. Okay, and I'm going to go to October 15th. And I am going to take a look at, again, the put side. Okay, so this again is called a naked put. And I can agree to buy Tesla for any price and say, you know what, let's say I'm really worried that Tesla's going to go down a lot. You know, it's at $735 a share right now, okay? And I just say, you know what? Man, I don't mind buying it for $650. That's 80, what is that? $87 below its current price. $87 below its current price. Even for that, I'm getting paid over 2%, about 2.25%, 2.5%. Okay? If I take this $14.85 and divide it by 650, I'm around 2.5%, okay? Or maybe 2.25%. Now imagine 2.25% just for agreeing to buy Tesla for $87 below its current price. And that too for a month and a half. Now, so you can ratchet your level of risk up or down according to what is comfortable for you. So just because one person is more aggressive and likes to get paid more doesn't mean you need to be, right? This is something that is very much customizable to your level of risk tolerance. If you're like, you know what, I want to buy, if I do buy Tesla, I want it for a significant discount. Well, here you go. Because you only have 2 choices if you want to buy Tesla for $650. You're going to wait for it to go down to $650. But instead of waiting for it to go down to $650, you can simply agree to buy it for $650 and get paid a lot of money. Now think of that, again, that real estate analogy I gave you. What is that homeowner going to say to you? The homeowner is going to say, get off my property and never come here again, otherwise I'll call the police, right? But in the stock market, it doesn't work that way. Now, again, there is a lot to learn. And learning how to do this efficiently and learning how to rotate your capital, learning how to analyze companies, that is where all the magic is. What you really, really have to learn is that, right? And the reason we came up with this course, the reason we came up with Theta is, again, because growing up, we were financially illiterate. We had to learn this on our own. Why? To get out of our predicament, to get us and our families out of that tough lifestyle. That's what we had to do. So we had no choice. But we had developed a great system, which now we share with as many people as possible, again, because we want as many people as possible to be financially alert and financially independent, because it meant so much to our lives, right? And again, like I talked about earlier, you think about all the problems that financial illiteracy causes, divorces and mental health issues. When it can be solved so easily, why not solve it? And what we designed Theta to be is we designed it to be the course that we would have wanted, the education that we would have wanted. I'm talking about myself and Matthew when we first started trading in 1998. It is designed to be exactly what we would have wanted when we knew nothing about the stock market, nor how to make any money. So we built it to be exactly what we would have wanted. So myself and Matthew, we made so many mistakes along the way because we're self-taught, right? We tried every strategy you could think of in copious quantities, and we made a lot of mistakes. I've probably lost at least $1 million in just trading mistakes over the years. Now, had I known this at a younger age, luckily I've done very well for myself, but had I known this at a younger age, it would have made a huge impact on my life. But I want to make sure as many people as possible are able to live the life they want. And this is done through financial literacy and financial knowledge. And I'm going to leave you with this one last thing before I turn it over to Christine and some questions. You ever see a lottery winner, right? Actually, funny, the lottery thing's scrolling up here on my screen share. Ever see a lottery winner and you see 50% of them go broke after they win the lottery? The reason they go broke is not because there wasn't enough money to become it. It's because they don't have financial literacy. And then you take a person who's made a lot of money, you take away all their money, and they're able to rebuild it all over again. Why? It's not the amount of money you have. It's what you have in your head that matters. Knowledge. And the beautiful thing with knowledge is people can take away a lot from you. They can never take away what's in your head. And that's the position we want to put people in. So Christine, I'll turn it over to you. I'm sure we've got some questions.
Yeah, we do. We've got some questions and we've got some great comments that I'm excited to share with you, Omar. But first of all, let me start with a question from Olivier, and I hope I'm pronouncing that correctly. Olivier is asking about what to do in a situation, or maybe you even have an example, Omar, of when you purchased a stock that was higher than it was and it went down. What was your strategy? How did you handle that situation?
Yeah, how you doing, Olivier? It's I've been heard from you for a while. I know you're in Montreal, so good to hear from you again. What do you do? Okay, so what do you do if you have to buy a stock and it goes down for a while? And it happens all the time. It happened during the pandemic. Well, we simply either we'll try to average down if we have more money, and this is why we believe in having real estate as well, because sometimes the stock market provides you tremendous opportunities. So if you've got real estate that you can borrow from, right, your lines of credit and stuff, we'll try to average down. Why? Because fundamentally we believe in the quality of the companies we invest in. That's one thing. Now, if you don't have the accessible cash, we try our best to average down. Again, we try to buy more shares at a lower price, therefore getting our average price lower. If we don't have that, we simply keep writing covered calls until we're able to exit that position. And if you're not able to write covered calls, we just simply wait. Remember our first goal. Our first goal is not to lose money, right? That's always our first goal. So we would rather wait, but we certainly don't want to lose money, right? So that's what I would suggest. And that happened last year. If you remember, Olivia, you were with us last year during the pandemic, right? Everything went down by 35% or more. And we had to buy every single stock pretty much we agreed to buy at significantly higher prices than the market was at. But because they were strong companies, they recovered and then some. And we made a ton of money last year as a result of that. So that's what I would say.
Awesome. Awesome. Thank you. And so, Omar, you started by talking a little bit about how passionate you are about financial literacy. And I just have to share the comment from Lewis. He's actually just 17 years old, and he's already taken the Theta trading course. And he's talking about how it's changing his life, changing his prospects. I'd love to hear your thoughts. What comes up when you have, somebody so young as Lewis already into Theta way of trading and building a life of possibilities?
Yeah, Lewis, you have no idea what this means to your life. If I knew this at your age, man, it would have changed my life. It really would have. I would have paid off my debt faster. I would have been looking into real estate faster. I wouldn't have had to work for as long. All I can tell you is this: you are so fortunate to have this knowledge at your age. Keep practicing, keep working at it. It's a skill like every other skill. You've got to work at it constantly and make it better, right? Just keep working, keep acquiring knowledge. Just keep working at it. Just keep working at it. And then over the years, you're going to acquire that knowledge, right? And the reason the knowledge is so much more important than the money is because you'll have money in your life. But if you don't know what to do with that money and how to grow, it means nothing. So you've just constantly got to grow and grow and grow. And what I would say to you is start small and keep growing from there. And the one thing that I didn't do, what I would suggest you do is, I just try to acquire as many properties and try to get as rich as possible. That's not a good approach. I would suggest something that I didn't do is begin with the end in mind. Envision what your ideal lifestyle is like. You say, okay, well, I want to have 3 months off a year. I want $20,000 a month coming in, and I want to travel 4 times a year. Whatever that number, whatever it happens to be, and then build your trading portfolio, your real estate portfolio to give you that lifestyle. Right? That's what I would suggest doing. But yeah, I love hearing stories like yours, Lewis. You said you definitely changed my life. I can't tell you how good that makes me feel. That's exactly why we started this. Right?
Awesome. Yeah, no, yeah. I'm excited to share that one, and I have to chuckle because I hope I'm pronouncing 𝐸𝐞𝐬𝐬𝐸𝐸𝐸 name right. They've said, "Oh man, I wish I started it when I was 17." And hey, you and me both, 𝐸𝐸𝐬𝐸𝐸. I wish I started when I was 17 too.
Yeah.
Then we have a question from Anthony.
We got Nav. Nav, how you doing, Nav? Good to see you.
And we've got a question from Anthony DaCosta. He is curious to know, so, if we can tell him a little bit more, how much does it cost for a course or how does this learning journey unfold?
Yeah. So the cost of the course is $1,997 plus HSC, just call it $2,000. I don't want to get into all the marketing nonsense and say it could be worth $10,000, blah, blah, blah. I'll tell you this much. I made, like I said, $1 million at least of trading mistakes. So, and I'm a big believer in investing in myself. I've done numerous courses. I've done Strategic Coach, a bunch of Anthony Robbins courses. I have done Tony Robbins, you call it whatever you want, but I've done a lot of courses on improving myself, because the old saying goes, the more you learn, the more you earn. So the course costs $2,000. You can either pay 3 payments or you can pay up front, but it's not just the course and that's it. That's not what we do. We want to get you to the finish line, and the finish line to us is financial independence. How do we get you to the finish line? Well, it comes with 6 months of support. So you get a newsletter every single day that outlines what's happening in the world financially, along with all of our trades for the day. And the idea is not to copy our trades. The idea is simply to learn, why do they do these trades? What was their thought process behind it? So that if we're gone one day, if we get hit by a bus, you can keep doing this on your own. We believe in teaching someone to fish as opposed to giving them a fish. Okay? So the course cost, and then we put the registration link there. It costs $19.97. You get 6 months of support, daily newsletter, weekly coaching call at 10:30. That goes for about an hour and a half. Weekly market review. And you can watch the course at any time you want. Very similar to the way Netflix is, right? How you can, there's 16 chapters. There's a lot of work to do. I'm not going to sugarcoat that because there's a lot to learn. You don't just, not everybody gets financially independent, and that takes work. So there's at least 14 hours of actually watching the course, but you can do it at your own leisure. That's the course cost. It's pretty straightforward. We've got the link there. So I'd love to see you in the community, Anthony.
Thank you. I think that's great. Hopefully that gave Anthony all the information he needed about the course. I really like the way that you started by saying, it's the price of the course, but really the course is just the start, because then you get the 6 months of community. It starts with that 2-day course, but then it continues for all the other items that you mentioned.
That's correct.
And then actually somebody else from our community actually chimed in, Naki, just to say the knowledge that you get is amazing, and the money that you spend on the course is totally worth it because you live it forever, which I think says it all. Yeah. So great comment. Yeah. Thank you.
Thanks, Naki.
Yeah, go ahead. Sorry.
Yeah, I was going to say, Christine, if you could just maybe post a link to our Google reviews. Anyone who's got any hesitation, trepidation, just check out the reviews.
Yeah.
I'm not a hard sell person. I'm very fortunate. I've done very well in my life, and I don't need, I'm very financially secure. Like, I wasn't actually doing anything before we started Theta, but I have a major personal issue with financial literacy. It cost me a lot of money in my life. Michelle asks, when's the Lambo coming? We're not Lambo people. I'm not a Lambo person. I've had a lot of nice cars in my life, but currently I drive a Tesla. Why? Because I own a lot of shares of Tesla. So I need to understand how the company works in order to understand what price I want to buy that. So, for example, we invest in Apple. I'm doing this on AirPods. I've got my iPhone, my iPad, my MacBook Pro. So when we invest in companies, we also use their products and services. So not just do we get to know these companies on a financial level, but start looking at financial statements. No, we actually look at, like, for example, I'll give you another example, Lululemon. We were investing in Lululemon. I bought every men's article of clothing from Lululemon so I understand the company better, right? And this is knowledge that we give you guys in the coaching calls. So not only do we examine companies that we invest in, we also examine why are we investing in these companies. So we always want to know, what are we investing in and why are we investing in? But yeah, I'm not really interested in Lamborghinis. That was and maybe in my younger days, but not so much anymore. I don't really care. You get to the point where you can just buy whatever you. I'm not saying this to just sound. When you can buy it easily, it's not as much of a. It's not a thrill. And I've bought a bunch of nice cars over the years, but the best car I've ever owned is a Tesla. It's the best car. No gas. It's faster than all the AMGs that I've had over the years, and yeah, I love it. It drives by itself. And more importantly, I get to understand the company better, which means I make a ton of money off Tesla stock. That to me is very important. I'm also part of this EV revolution to get the world off of the use of fossil fuels. So I'm a big believer in that.
Awesome. So yes, so no Lamborghinis. I think that actually taps into a question that we often get about, is this a get-rich scheme?
Yeah, we're not into that stuff. You see people advertising Lamborghinis and look at me, I'm not into that stuff at all. It's just not what I do. It's not what Matthew does. We're much more low key. For us, money is not a tool to buy things. It's a tool to buy our freedom, to do what we want when we want. Never having to work for anyone again in your life, ever, to me is far more important than any material items I could ever have, right? So giving my children the ability to live the life that they want, again, far more important to me. And that's, it all depends on what's important, and that's very important to me. Awesome. Vic says, I may have missed it, but when is the next course? The next course, Vic, is scheduled for the weekend of October 2nd and 3rd, okay? Now, remember, it's 9 a.m. to like pretty much 6 p.m. both days. It's pretty intense. But if you sign up immediately, you get the newsletters right away. You get the coaching calls right away, and you can watch the last recorded course by just logging in with your unique username and password. And you can do the course, the exact same course that we did, let's say, in August. You can watch the recorded version of it so that when the live stream comes in October, you are completely familiar with the material, and it's more of a reinforcement mechanism, right? The idea is to get the knowledge down and get going. That's the key, right? Yeah. So Anthony DaCosta says, thank you, Anthony, for being on. Michelle, great response. Thank you. Yeah, if you'll get to know me, Michelle, none of us are really into that stuff. It's just simply not what we do. We're not flashy people. We're more, like I said, we're much more about freedom of mobility and freedom of life and experiences than we are into buying stuff. Buying stuff, I've been poor as an adult, and I've been very wealthy as an adult, and it's not the money that makes you happy. It's the freedom that makes you happy. It's the autonomy that makes you happy. That's what makes you happy. It's material items, I find, only give you temporary happiness. They don't give you long-term happiness. Okay, Hitinder says it's for sure a win-win. The crux, finding the right stocks. Absolutely, that is, in fact, that is that excellent question, Tinder. That is the absolute basis behind it. The key, and this is why we focused the entire half of the first day on fundamental analysis. How do we examine the quality of a company? How do we know, or how do we have a good understanding of where it's going to be a year from now, 2 years from now, 3 years from now? This is what we do on the first day, okay? And then we get into the options section of it. Now we understand, okay, this is a great company, right? Now I want to own it. Okay, well, great. We've done our homework. Now the idea is, okay, fine. We're going to agree to buy it for lower than what's currently trading at. That's the idea, okay?
I think, Omar, you mentioned the fundamentals a couple of times and how important that fundamentals and knowledge is. I wonder if you would talk a little bit about, the reason why you do theta research. I know Naki, one of our members of the community, is asking about newsletter subscription. So there's that value that we bring.
Yeah, at the end of the 6 months, we have 6 months it's included, but at the end of the 6 months, you can subscribe to continuing on the newsletters. We have 3 different tiers. You can pick which one you want. And we obviously want to see you remain part of the community. But, Naki, as you know, we give you more than enough after 6 months to be successful at this. There's plenty of support. We don't just leave you at the end of the weekend. Again, that's not what we're about. We are committed to seeing as many people as possible get to their level of financial freedom they need. And the reason we want that, again, is because it creates this amazing community. And I think that's one of the many reasons we have the reviews that we have. It's not accidental that we have these reviews. It's for a reason. And you guys can see here, some people have taken our courses and they are clearly pretty happy. So, yeah.
Awesome. So one more question that we often get, Omar, is how much money do I actually have to start theta trading or learning options trading with theta?
Yeah. I would say you start off with $5 grand, 10 grand, maybe even $2 grand. I don't think the money's really important initially. The knowledge is just paper trade initially to begin with. If you start, there's a famous Muhammad Ali quote. Okay, we can either sweat in the gym or we can bleed in the ring. We do not want to bleed in the ring, right? So what you do is you get the knowledge and then you open something called a paper trading account, which means you're trading for real, but the money is fake. So you're going to make your mistakes, or just think of it as training for a boxing match, but you're hitting a punching bag instead of somebody hitting you, right? It's much better. And then your gut will tell you, you know what? I'm ready for real money now. And then you move to real money. It doesn't matter how much you start off with. You have to start off with at least $2,000. But the reality is probably a bit more, $5,000, maybe even $10,000. And then as your level of comfort grows, as your knowledge grows, as your familiarity grows and your account grows, you just kind of increase it from there. And that's what I would suggest. Yeah.
Awesome. And one last question that we often get is, how much prior knowledge about stock market or options do I need to have?
Zero. We've designed this for people who don't know even what the stock market is. Again, we designed this course to be what we would have wanted when we first started trading in our early 20s, when we were young kids and we didn't know anything about the stock market, right? We've designed it for people, and we know that people don't have this background. So we designed it right from the beginning. Even if you've been trading and you're an investor in the stock market, you will see how valuable this knowledge is going to be, right? I just want to address here one question from Olivier. I find it a bit unfortunate we can't access the course review if you don't have a package, though. Yeah, unfortunately, after 6 months, you can review the course all the time for the first 6 months. It's good in your package, but after 6 months, that subscription does end, and the reason is because we don't want people to be sharing their access indefinitely. So we work really hard at this, and we're not. We want people to be successful, but at the same time, our time is also valuable. So again, like I said, 6 months, you've got plenty of time to review everything. You can review and review and review everything. After 6 months, it's on you if you haven't done the homework. There's a lot of time to review. So that's the idea. Okay.
Super helpful. One last question, Omar, that we often get is about the money back guarantee. I wonder if you would just talk for a moment about the guarantee that you offer.
Yeah. So the money back guarantee is, full money back guarantee. You just got to show us that you made a couple practice trades. I think the whole time that we've done this, we've had 1,200 students go through. I think maybe, I don't know, maybe 15 or 20, maybe people have asked for their money back. And that's generally due to an extenuating circumstance, like something family incident. And we're very sympathetic towards that type of stuff. Or sometimes it's not for people, but for most people, it's plenty of time. We offer 100% money back guarantee. Why? Because we know what we do is a lot of value. It's just that simple, right? And again, you posted the reviews here, Christine. Yeah, you can see the reviews.
Yeah, the reviews
kind of, yeah. Olivia says, makes sense. Would be nice to have a cheaper package with only newsletter, maybe access to the course, like $10 a month, let's say, more Netflix accessible. Yeah, unfortunately, there's a big cost to us producing that newsletter every day, and I'd love to make it $10 a month, but think of how much people you have to be involved in your research team to produce a daily newsletter. Like, it's pretty intense, the newsletter. So there's a significant cost to us, and like I said, we still think it's pretty reasonably priced. You get the newsletter for, I think it's about 60. If you pay up front, I think it's about $67 or $65 a month. So not bad. And that's after 6 months. Remember, it's included for your first 6 months. Okay. All right.
Great.
All right.
Great.
Any more questions anyone has? Anyone wants to see me do any more trades or anything like that, just let me know. We've got a few more minutes here. I want to make sure that you guys understand what we do, and more importantly, that you get excited to see what a huge opportunity this can be to your life. It's not, this has the ability to change your life forever. Not many things have that ability, right? So, Olivier, good to hear from you. Thank you. Hopefully we'll hear from you in the Facebook group soon. So yeah, if anyone has any questions, guys, now would be the time to ask. All right. Any more questions, or we're?
No, I think we've answered all the questions.
I think we missed one here. I wouldn't mind answering this one from Olivia here. What do you do if a stock you select is overvalued, like Tesla? Let's say at 1,000. You would have to believe that Tesla goes to 2,000 to buy it. We always heard buy low, sell high, but what if you bought high? Well, again, you have to look at what you think the value of Tesla is going to be a year from now. So overvalued or undervalued is all a relative thing, right? Like, some people will say currently at 737, it's overvalued. Well, is it? Right? The question is, what do we think it's going to be a year from now, 2 years? And it's never even gone to 1,000. But the idea is to analyze the company, see what it's worth. And as you guys know, for those of you who've taken the course, we analyze the companies with you. We show you our homework, right? We show you how we came to that conclusion, so that when you are investing in that company, you're like, oh yeah, we understand how we got to this valuation. That's the idea, right? Okay. All right. Any last questions, Christine, or I think we're good today?
I think we answered all the comments. And again, Omar, I think that you are always so generous with your time and your knowledge. Oh, actually, sorry, we've just got 2 more questions come in. So another one from Michelle. Is it possible to use margin safely, or do you always advise slow and steady? Absolutely no margin.
We use little to no margin. We do use margin from time to time, Michelle. That's actually a question, by the way. So guys, for anyone who doesn't know what margin is, let's say, for example, you have $1,000 in your account. Well, you can buy much more than $1,000 worth of stock. That's what margin is. The ability to buy more stock than you actually have money for. Now, the reason we use margins, again, because we're pretty comfortable with the companies we invest in, but we don't want to get something called a margin call. So if we do use margin, we use it at maybe 20%, 25% sometimes. And there's something, Michelle, called seasonality of stocks, okay? Have you ever heard of the saying in the stock market, sell in May and go away? Right? There's a reason for that. Because May to October, the market is kind of flattish statistically and historically. But from October to May, it does quite well, right? Now, there's nuances to that, and there's certain months that they do better than others. But the point is, when we know that statistically odds are in our favor, well, we'll ratchet up our margin a bit, right? We might go to 1.2, 1.25, 1.1, like 10% or 15 or 20 or maybe even 25%. But we're never going to go to 200% or something like that. That's not, because it's just too dangerous. So again, remember, our first and foremost goal always is not to lose our money. That will never change here at Theta. And how do we not lose our money? Well, we don't lose our money by being irresponsible. So yes, we do use margin safely, but we're very careful not to use too much of it. So I hope that answers your question.
Great. I think that was really helpful. And then we also have a question from Darnell.
Good question,
and he's
Darnell.
asking, yeah, okay.
Yeah, good question, Darnell. Certain amount of shares. Yeah, absolutely. You must do 100 shares of whatever company that you're agreeing to buy. It must be 100. So, for example, if I agree to buy 100 shares of Apple, well, I need to have about $15,000 in my account. But there are lower price stocks. Like there's a stock that we trade called Palantir. It's not a household name that you know. It's only about $25 a share. So if I agree to buy 100 shares of Palantir, well, I have to have $2,500 in my account without using margin. So yes, absolutely, they must be done in lots of 100 shares. So every time we agree to buy Tesla or whatever, that $41 a share, well, it's got to be times 100 shares. So 100 is the answer to that. Yeah. Okay, next question. Avinash, I took the course, virtually recorded ones in October last year, but I've not been able to complete the content or execute these yet. I have zero background and found it to be a little too technical for my level of understanding. Can I get some help? I need to review the material again and start trading. Yes, Avinash, why don't you send me an email at Omar@𝐻𝐶om, and if you've had any reasons why you weren't able to do it, I would be happy to extend your subscription for a little bit longer so you can restart the course and just start learning again, because I understand life. We know that life gets in the way and sometimes you can't get to it, but we do give you the 6 months, but sometimes we understand that some people can't get the 6 months. So just shoot me an email. Christine, you mind writing my email there? Omar@𝐻𝐶om.
Yeah, we'll get that into the comments.
Just shoot me an email, and I'll be happy to give you some time to review the material and start trading again. Again, we want to get you to the finish line. That's very important to us. Okay. Naki, if earnings are coming up, do you shoot for the expiry date after earnings? Oh, my audio is a bit off there. If earnings are coming up, do you shoot for the expiry date after earnings? I'm assuming volatility is higher because of the unknown, therefore improvement. Yes, Naki, that is the correct answer. Yes. Now, 4 times a year, companies report earnings or the amount of money they make, right? Now, because this is an unknown event, because earnings could be good, they could be bad, but we've done our homework. We think they're going to be pretty good, right? But because it's an unknown event, if we agree to buy our shares after the date of that earnings, well, we get paid more, generally speaking. Why? Because there is an unknown or an uncertain event. This is the concept of volatility. I actually have this book you can see in the corner here. That's a 550-page book just on volatility. So there's a lot to learn when it comes to volatility. And there's like, Naki, you've done the course. There's a lot to learn, but you can also know how valuable this is for the rest of your life. It's extraordinarily valuable, but I'm not going to, you know how it is. There's always things to learn, right? But the answer to your question is yes. And I like the Warren Buffett way of doing things. The more you learn, the more you earn. It's just that simple. Yeah. So great. Any more questions? Otherwise, I'll just have some closing comments.
Yeah, I think that would be great, Omar.
Yeah. So anyways, I want to thank everyone for taking time out of your day to attend this. I hope you've learned something new, and I hope that you take the time and opportunity to research exactly what we do. It literally has the ability to change your life, and I would love to see you all part of the Theta community soon. And thank you for all the Theta members who are on this call and just saying what this has meant to your life. Okay. I really appreciate it, guys, and I hope to see you part of the Theta community soon. Take care and have a good afternoon.
Great. Thanks, everybody. Yep. Check out the link in the comments. You'll be able to find out more about Theta trading and our upcoming course in October.
Yeah. And just email me if you have any questions.
Thank you for being here. Okay? Yeah.
Thanks, guys.
Thanks, Omar.
Bye-bye.